So staying on track with financing, next we're going to dive into the public-private finance for Cleantech scalability in Europe. So to tell us all about it, let's first welcome Irene Galvez, Head of Cleantech and Growth Capital Division at EIB. Next, we have Eric Trusiewicz, CEO of Rondo Energy. Then we have Mario Fernandez, Head of Catalysts at Breakthrough Energy. For our moderator, we have Santiago Muguruza, Head of BBVA Spark at BBVA. Thank you.
Well, good morning, everyone. Welcome to this exciting panel about one of the most, I would say, challenging aspects of climate tech currently, which is financing first-of-a-kind projects. As you very well know, first-of-a-kind projects entail a significant risk. They require a lot of investments. And by definition, since they are first-of-a-kind, they often lack a sufficient track record to make private investors confident enough to support these projects. And this is why partnerships, private-public partnerships, are critical in this space. And today we're going to have a world example of such partnerships in the case of Breakthrough Energy and the European Investment Banks that have supported Rondo Energy. So thank you very much for joining us here. Eric, Mario, Irene. Should we kick it off with you, Mario? And it will be, I think, very useful for the audience if you can walk us through the breakthrough model for this type of projects, and how do you go about looking for opportunities?
Sure. So thanks for the invitation. Thanks, you guys, for being here and taking the time. So Breakthrough Energy, as you guys know, is the umbrella sort of arm that discovers, develops, and then deploys into climate tech. I had the Catalyst program, which is the last leg of that, which is the scale-up and deployment arm. The way we look at these things is, there is, once the science has been proven through either, a pilot or, a lab, it needs to scale up. It needs to scale up very quickly. And as Santiago said, capital for that scale up, whether you're going from a pilot to a 10 to 20x demonstration project, or you're going from a pilot, the next step beyond that is the first-of-a-kind project. It needs a lot of capital. And that capital, as we find, is really hard to come by. So at Catalyst, what we do is identify the companies that are at the cusp of that going to the next stage, the next scale up, and we partner with them. And it's not just capital, but rather the expertise that helps them scale up, that helps them get to a model that is, a commercialization model, that gets to a model of how they're going to build it, how are they going to, design it, engineer it, build it, and operate it. So that's what we do. So, what we do is identify companies that have that potential to be able to scale up, that the management, the CEO and the management is there and have that mindset of we need to build, we need to scale up, and that they have a plan for this, and they have along the way we help them, we partner with them in order to get them up the curve. And the question for us is always, can this CEO scale up? And the answer in this case with Rondo and Eric was yes, a resounding yes, and our work proved that, and obviously our work with the EIB and the European Commission.
Thank you, Mario. And Irene, in your case, the European Investment Bank has been instrumental in unlocking capital for many of these projects. So what is your strategy? What sort of projects you look for, and what are the typical instruments that you have in your toolbox?
So good morning, and thank you for having EIB here today. It's a pleasure to be here. For those of you that are in the audience that may not know the EIB, We're the Bank of the European Union. We are owned by the 27 member states. And we are supporting projects that are taking place in the EU27, Norway, and Iceland. So with that in mind, we are a policy-driven bank, and it is at our core, especially these days, to make sure that we can propel innovation, close the digitization gap, and so supporting innovative breakthrough technologies is at the core of the mandate that we do. We have a program. Well, the EIB is a very big animal, so we have like the billions of investments annually. But when it comes to development of new technologies, we have a program that we've been developing with the European Commission since 2016, doing venture debt, again, in Europe. We are the largest venture debt provider. We have deployed over 2 billion in capital, and of which about 1 billion in Cleantech. And so annually that comes at a volume of around 400 to 500 million in tickets of about 20 million on average. Or we can do a little bit more. And what we're doing is precisely with this program trying to tackle what Mario was identifying as that, climate stack that you need to get these projects through. So we come in as a first leverage to these transactions. We're complementary to other equity rounds. So we come in when it comes to clean tech for technologies that are around TRL 6 and above. And our spirit is to try to bring these technologies all the way to commercialization. And that's it as an intro. Perhaps more with
Thank you. Just a quick follow-up. I didn't get it right. But do you always go hand in hand with equity sponsors, or you may actually go solo ahead of them, or at different moments?
So the interesting bit about the program of EIB Venture Debt is that we do complement equity rounds. It is important to understand that we crowd in private sector investment. This is not something that crowds out the private sector or the equity investors. We don't need to come in exactly at the same time, and we also don't need to come out at the next round. Because we're not a fund structure, we're able to provide patient capital that can stay in, really, until the company is able to reach certain milestones. And therefore, we're complementary, but we don't need to participate exactly in the same equity round.
Thank you. So moving on to Eric, before we jump into the subject matter at hand, the financing, I think that would be super interesting if you give us a brief description of the fascinating technology that you have, for thermal heating in industry, and then perhaps we can jump into the financial part.
Terrific. So Rondo Energy is the company which is focused on decarbonization of industrial heat. Industrial heat is around 25% of global CO2, and industrial heat is made today by combusting fossil fuels at the site of a production of industrial commodities. Pretty much everywhere in the world, that's the way you make steam or heat for industrial processes. Rondo is a platform that allows to electrify those processes with renewable electricity. Renewable electricity has become cheaper than fossil fuels in many places in the world. And the problem with electrification is renewables are by nature intermittent, and industrial processes, large-scale industrial processes, are always a continuous processes. So Rondo is a thermal battery that takes that renewable electricity, whether grid-connected electricity because there's a high penetration of renewables on the grid, or on-site renewables, and it captures that and provides a base load heat to industrial processes. So that's the problem that the company solves. And the platform that we chose to do that is looking at existing very low cost, very scalable materials. So we've created a refractory material, looking at the steel industry and looking at something called a copper stove in the steel industry, which is scaled already globally. It's an electrified copper stove. So that allows us to be de facto the fastest scalable and lowest cost platform offering this kind of technology.
And when you were, going from piloting and testing the technology to scaling, what were the biggest challenges you faced when scaling? Beyond financing, we'll get into the financing.
Okay. Scaling the company, I think at each phase of the company, you face different challenges. So I had the luck to be there at the initial founding of the company where there was just a handful of people in a garage. And the first thing is, to create a product that works. So you can do that at a pretty small scale. We had the backing of Breakthrough Energy Ventures and Energy Impact Partners in the Series A investment, and we're able to take the product to something that absolutely functions, and that we have independent engineer report about how that proves that functioning in technology. So that's sort of the first checkbox. The second is really to find a configuration of that product that customers want and to develop that. So that was really through the Series A, the challenge that the company faced. We found a lot of traction. And then the third is really, how do you finance those large-scale energy infrastructure assets? So we eventually raised more than 100 million at the top co in equity, but a single project, minimum can cost you 20 or 25 million dollars, up to 50 or 100 million for an initial project. So even if you're raising hundreds of millions in equity capital, you really need capital partners and non-dilutive capital to make sure shareholders have a good upside and are not just financing the infrastructure assets. And that's where EIB and Panelists came in for us.
So this is a great segue to the matter at hand. So how do you go about that? How did you get to learn and get acquainted with your current partners, and how did the process go at the beginning?
Very simple. So Breakthrough Energy is sort of an integrated platform. So Breakthrough Energy Ventures is an equity investor. Breakthrough Energy Catalyst was introduced by our board member, who's here in the audience today. He introduced me to Mario, and Mario, I think, very quickly identified that Rondo was a technology within Breakthrough's portfolio that could scale, because many of the investments are early stage. Rondo was really a growth stage technology. And then working with Mario in that initial phase, he identified this as a technology that really could work together with the European Investment Bank also. And Rondo as a company has been focused on Europe, probably for 18 or 24 months prior to that, but struggled to get traction in that market because we didn't have an offering that really took the risk on Rondo and off of the final customer. So what that allowed us to do, in that initial phase, is to go to the same customers that we had originally said, please buy a 25 million or 30 million dollar piece of energy infrastructure that you can't really see operating anywhere in the world, and pay us for that up front, to going to those same customers and saying, we'll install this for you. We have financing partners. You'll see that it's working, and you'll pay us over a 15 or 20-year period.
Interesting. And so, Mario, Irene, do you mind elaborating a little bit further on the partnership that you have? And also, within that partnership, what do you look for in projects? And what are the key milestones or KPIs that make you comfortable, in approaching this type of deals?
I think
Want to start?
Yeah, I can take the first part, maybe you can take the second one. So I think I was just talking about our sort of overall policy mandate that we have at EIB to invest in breakthrough technologies in clean tech in Europe. What happened here was really interesting, and we're talking about public-private partnerships here in this panel, is that actually there was a meeting of minds, and I think we absolutely need to have more of these ones, where the European Commission came together with Breakthrough Energy and said, okay, from the palette of technologies that are going on, what are the critical ones that we want to scale in Europe? Because Catalyst is all about scalability, right? And so what are the ones where we can put our resources together to have a catalytic effect into them, make them happen, come to market faster? So we zoomed in a number of technologies, and it's hydrogen, it's SAF, long-duration energy storage, decarbonization of industry, and direct air capture, right? So those were identified within the partnership, but to say, okay, those ones actually fit in both of our priorities of these two very different institutions. Otherwise, let's pull our resources together. So we have a committed amount of, I think it's 800 and something million euros. the equivalent in dollars, I don't know. But anyway, that only for the European Union to deploy in these technologies. Why is this important? This is important because, as Eric was just saying, at a certain point of the development of the clean technology, you're having infra-type assets at those very challenging returns. You need that granularity in the capital stack, on the one hand, that enhances equity returns for those new investors coming in. The second challenge is to have all of these funds coming at the same time. Because most of them actually, if you scatter the provision, they end up actually running out of cash in the process. So I think what the partnership does, on the one hand, is to be able to focus on areas, bring the resources together, and bring them at the same time, which is critical that it happens. Now, I think for me, the other important bit is where you combine expertise, and you just don't double up necessarily on your skills, but you actually complement each other. So we're fronting, obviously, for the European Commission, so you're dealing, luckily or unluckily, with me and the team. But we have a way of performing due diligence in companies and looking at the growth of the company as a whole. We look at the business plan over the next 3 years, mostly at the holdco level, including the projects, but we have this holistic, I would say, objective to bring the technology to market. And we look at that level. I think that Mario's team, and I'll let you probably elaborate on that, is much more focused on making the projects something that can be eventually bankable and scaled, and preparing that for infrastructure investors. So the whole idea here is how to get these assets to be financed with the cheaper sources of capital, which is infra investors, it's PF lenders, and how do you structure that project so that it can be a blueprint for bankability in the next, and we have the first of a kind in the next of a kind. I think that probably, is it a good?
And if I may just, that resonates a lot with us, not being a bank, because we obviously do a lot of infra-type lending. But the reality is that in this space, there is so much uncertainties, no, in terms of pricing, demand, mostly pricing and demand, no? Yeah. And so usually you don't have off-takers. Sometimes you do, but not many times. And market pricing is very is uncharted territories, no? Because there are very novel technologies, no? So, how do you guys go about structuring this to make the banks, no, that are likely going to come later, hopefully sooner?
Sooner, that's the point.
Sooner,
that rather than later, is to
you're
have
preparing the
like
ground for us.
CO2, COD plus 2, and then you can have the banks in. And then the job will be done, at least from our perspective.
Exactly.
So,
no, absolutely. So that's exactly it. I mean, the point is that, you know, the Catalyst team was made up of infrastructure investors, right? So, you know, there's a lot of great VCs out there that focus very much and have that technical expertise to pick the best technologies, right? But, you know, from our point of view and the Catalyst point of view is, you know, which technologies, regardless of how amazing the science is and has been proven, how could you scale up very quickly? And to your point, I think one of the things Eric mentioned that really was the key to unlocking all this is, you know, Rondo had a great offering as far as a technological product, but a commercial product had not been recognized by these customers, right? And I think, you know, there were a lot of very nice conversations, and it happens in a lot of companies that, you know, everyone is interested in, in talking about your product and saying, oh, how does my product fit? Very few are willing to take that leap of faith to how do we actually buy this product and get it into our processes, right? And I think that was the unlocking with Eric, that we realized, hey, Eric, you know, you have a lot of great conversations around the world. Why don't you start in Europe, right? Why don't you deploy in Europe first? We have this JV, and in Europe, what the JV and our funding is going to allow is for you to switch from that CapEx model to an OpEx model, right? So we called it Steam as a service, which, hey, I'm going to bill you on a monthly basis for a product that you need anyway, right? So I think that was a great unlocking of, to your point, you know, price and offtake is offtake and value, you know, firm. firmness is often the hardest thing to get. And we were able to unlock that with Eric working with the three teams working together to get that. And I think what he did is, again, it starts that adoption. We worked on a long-term, contract that now is a bankable contract that you guys could take a look at and say, hey, this works because it has all of the features that a project finance bank or infrastructure investor would take a look at, because it doesn't put all the risk on a small startup, and the contract has a bunch of penalties and LDs that they need to pay, right? So I think that was a great unlocking. And the other part that we really worked on and we focus on is how do we set up the company, not just to do the first 3 projects, but how do we set them up for that growth, that platform growth, because we know that large-scale infrastructure investors many times don't want to get out of bed for less than $500 million, $1 billion of investment, right? And what's great about the Catalyst program and the Catalyst team is we've done that before. We've done it in our previous lives, and we're able to apply this now. And we have great examples, not only Rondo, but Infinium in the U.S., where through our work and our structuring, we got Brookfield to come in for $1 billion into a project and into a platform, right? So I do think that that is fundamental to what we do, which is how do we set Rondo up? How do we help Eric scale his team, scale his processes, really vet them in a way and prepare them for the next stage of fundraising. So that to me is the secret sauce. And as Irene says, that combination of what we do as Catalyst and what EIB does, and the fact that both of institutions are very commercially driven and have that mindset of how do we push this up the curve, I think that's why the partnership works. But
so I guess now
let's ask Eric.
Eric is going to be like,
what is your perspective?
that was painful.
How has it been in your experience, the whole process with the partnership? How has it been?
Yeah.
And to what degree do you think it has helped your company to move forward? No?
Yeah. I think it has been a fantastic and extremely intense experience that has allowed that has allowed the company to grow at a rate which it definitely could not have grown without this sort of a collaboration, and also to penetrate Europe in a way that it definitely couldn't have done that. And I think the intense part was intense for the better of the company in the long run. So it was a learning process of first, actually, I would say the first and most fundamental thing, it allowed us to have a commercial offering that was compelling to the customers. Instead of saying, here, you guys take all this financial risk on this transaction, we said, hey, look, there's 2 incredible partners that are willing to share in the financial risk, that believe in our technology. If this isn't going to work, you're not going to be paying. So that underwriting, which was very intense, then helped us to give that compelling commercial offering to the customer. And I think through that process, that underwriting was a very intense process where we learned exactly what's going to happen when we go to an infrastructure bank and talk, about a normal commercial offering that's financed with project finance. So that was probably a year, of very intense conversations, building the company. Catalyst and EIB both looking at not only, hey, how do these projects work, but what are you doing to build the team that's going to construct these things? What is your business plan in Europe? How are you going to articulate this technology? What is the long-term cost of your technology? Are you going to be the most competitive technology, et cetera? So after going through that process, we ended up with 3 projects in Europe, so 3 lighthouse projects in 3 different industries, 3 different countries. So we really have a pathway in Europe, which is enormous. That helps for the whole company and the company's growth. And we did end up also finding a top co-investor that also wanted to give us a fairly large-scale project finance facility that was really off the back of our understanding of project finance. So that's something we'll announce more details about later, but it's a similar case where going through that process really trained us and also attracted external capital that said, hey, if EIB and Catalyst are both very interested in financing this, why don't we also look at that?
Excellent. Great. I'm conscious of time, so perhaps it's a good opportunity to open up the floor for questions from the audience. If anybody has one, feel free. I think, is there a microphone coming available?
They're getting it.
Gentlemen. Yeah, thank you.
We could probably hear you from there too.
Okay.
I think you're, this should work.
Hola.
They're recording it though.
Hola. So my question is to Rondo as a company. So when you raised Series A, what was, let's say, your commercial traction at that point? Were you still in technology development phase, or already had customers on site for the product as a service?
Yeah, so I think we were pretty lucky at the Series A to have a fair amount of commercial traction, based on the co-founders' history with, other customers. So the two co-founders of the company had a long history in solar thermal technology, and they had a relationship with a company that purchased an initial unit near the Series A. So that was very atypical. It's not something that's repeatable, where you can go to a multinational industrial company in Europe and do the same thing. But that relationship of the founders and long history of the founders allowed us to have one project that was in the process of being sold at Series A. And we also invested into a pilot facility, a 2 megawatt-hour facility running at a customer site around that same time. So we did have some degree of commercial traction, but going from well-known customers for a single project or a pilot project to trying to convince blue chip industrial companies with a global mandate to purchase your technology, there's quite a difference there.
Yeah, and if I may, I think one of the things that I identified when I first interacted with Rondo, was they did have a very long list of pipeline of projects. And my question was always, well, if all those conversations, are going well, what is it that's going to turn them into actual purchases or actual contracts, right? And bankable contracts. And I think that is the big difference. And, I think one of the things that we've learned through our time here at Catalyst is, at the end of the day, big corporations, are very much risk adverse. They have the motivation and they want to decarbonize, but the people that are making the decisions or engaging with the new technology, with yourselves, for example, as a startup, have long careers at those companies, and buying into a new technology is a huge risk for them personally, right? Because if this goes bad, they're going to say, why didn't you just buy something that was proven, right? And I think that's the piece that we found that you have to unlock, that a lot of the conversations are nice, a lot of the conversations are pleasant, people have the right motivation, and these are very long conversations, it just keeps going, and a lot of startups feel like, hey, I'm almost there, but the reality is, sometimes there's a big leap between those nice conversations and an actual signed, bankable contract. And I think that's what, together with the IB, we do, is unlock. How do we unlock that, right? How do we unlock that piece of actual signing contracts, so that BBVA can look at it and say, hey, I want to come in, and here's the prospect of growth, et cetera.
Yeah.
Hi, Eric. Nice to see you. Irene, Alexis here. Mario, you were just saying it's wonderful and now looks very fortuitous that you guys chose to set this up in Europe, especially around the current moment. And granted, this is so much in flux at the moment that it's hard to say anything for sure. But I'm just wondering, to what extent is particularly this format of having worked together with the EIB and Catalyst and established this in Europe, how much is this insulating you from some of the turmoil that is going on in the markets, and particularly with whatever freedom you can speak about it, to what extent are you insulated from where all the tariffs are going and how the markets are sort of retreating into their own regional areas? Yep. So that's my question.
Sure. Yeah, thanks for the question. So, definitely very important impact in fortifying us in Europe. The company has always had a fairly geographical diversified strategy. We didn't want to have all of our projects in the US. We do have quite a penetration of projects in North America. We have several projects there. We have several projects in Europe. And we have a very important pipeline in Australia, Middle East, and other places. But we wouldn't be in process of execution of 3 lighthouse projects in 3 European countries if we couldn't have moved as fast, with this partnership as we did. So very important impact. And then on the, tariffs question or other political questions, we've always had a strategy to be fairly diversified in sourcing of different materials. We have a supply chain which is fairly standard materials that you can get in different places. So we have flexibility in moving around supply chain to respond to tariffs in different places.
A good question.
Any more questions?
I think we're out of time.
Hi, congratulations for the panel and for the deal. It is very exciting to see this happening. I'm Alberto from Cleantech for Iberia. One of the questions that I have is what is next, right? Like, the deal, the agreement with the EIB and Ankara is amazing, but we'll be able to, continue deploying projects. What is your recommendation for, private banks? We have BBVA sponsoring the Energy Tech Summit, where it's like, what do we need from the financial actors to be able to play perhaps new financial mechanisms, perhaps new structure to help on deploying more projects and chiming into the game?
I think 30 seconds on my side since we're out of time. Thank you for the question. Clearly, our challenge is to be able to bring in commercial banks earlier into the space, and this is very, very challenging. So what we're working on is developing a counter-guarantee instrument for commercial banks to unlock access to more affordable working capital facilities for clean tech innovators that don't have the bankability yet to be able to access these LCs without posting a lot of cash collateral. So that's next.
I think, if I may, and one of the things that makes people sort of banks want to jump into something is knowledge, right, and comfort. And I think one of the things that, we've always, or people, when I came in 2.5 years ago, people were like, oh, we need all these companies to do project finance. But again, having been a project finance practitioner, my rebuttal to that was always, you are 5-10 years away from that, maybe, if you're lucky. But I think what we do is, the way we engage with banks is banks that are motivated, such as BBVA, have the right knowledge, such as BBVA. What you do is you start getting them into, the corporate sort of funding models, right? Where it's just corporate debt, right? When a company has raised 100, 200, 300 million, there is that space for a corporation, for a bank to say, hey, I'm going to lend you 10, 20, 30, 40 million, right? Now, is that sort of life-changing? Is that going to finance the whole pipeline for Rondo? No, but it does get BBVA the ability to start looking at, oh, this is how they did the contracts, this is how they structure, this is how they deal with customers, this is their growth path, right? So I think we need to do more of that. And I think banks, again, we've been sort of hitting our head against the wall of like trying to fit project finance in, where the reality is what you need is information and you need knowledge, and you could attain that through, other pieces such as, LCs or corporate lending that some people are just not focused on. So,
I would add just one last thing from Rondo's perspective. We see huge amount of interest from infrastructure investors already, and the unique thing that we have to do is just quality of execution on these projects. Yeah. So if we execute those 3 projects in high quality, budget, timing, etc., we're spoiled for choice of the infrastructure investors.
Yeah, clearly, because obviously it is the commercial risk, but the execution of the project risks, which is very relevant. So Eric, Irene, Mario, thank you very much for the panel. I think we've made clear that financing FOAX is possible, thanks to such partnerships as the ones you have, and obviously you have the right technology that can be scaled at competitive prices. No? So thank you very much.
Thank you.
Thank you.
For having us.
Thank you, everybody.
Thank you.